I've been using a trend following system since the mid-1980s with good success. Now, over the years, I developed several trend confirmation indicators that I'd like to share with you that increase the profit potential and accuracy of the trend following system. At any given time period, there can be hundreds of stocks that qualify as a buy using the Trendline stock strategy rules. The problem lies in trying to narrow down this list of buys to a manageable number of stocks that you can trade with a limited amount of trading capital. In my trading experience, I discovered that stocks that are making new 52-week highs tend to continue their price uptrend. A stock that makes a new 52-week high confirms the price uptrend and allows us to narrow down our list, our buy list, to stocks with the greatest profit potential. Now, I literally check this 52-week high list almost every day, and in checking it, I discovered that when you check this list every day, you start to notice stocks in certain industry groups that make new highs almost daily. Now, these are the industry groups I like to focus on to narrow down my list of stocks with the best profit potential. I will then normally buy one stock or option from each of the top performing industry groups. Quantitative research suggests that approximately a half of a stock's price movement is due to the industry grouping of a stock. So that's a good confirming indicator. And focusing on the top performing industry groups provides us a constant tailwind to our trading success. It allows us to not only narrow down our list of stocks, but also provides us stocks with the best profit potential. Now, currently, aerospace, medical cost containment, infrastructure, basic materials, and agriculture are the top performing industry groups whose stocks are making new highs. And of course, the length of time the industry group will remain in the new high list will vary, and normally it's from several months to a year or even longer. And right now, the home builders, mortgage lenders, real estate, retail, and financials are the bottom performing industry groups whose stocks are making new lows. So for these groups, you want to buy inverse or bearish ETF funds or put options. Now here's another price chart of Medco Health, and this is another example of a stock in an MVP trendline buy mode with the 40-day trend line above the 80-day trend line. And we can also see it has confirming indicators because it's making new highs almost constantly. So it's been giving us a lot of opportunity to enter, and because it's been making frequently new highs. And it's also in one of the top industry groups. So those confirming indicators help me decide which stocks to trade and which ones to pass. And here's a price chart of Monsanto, and again we have the confirming indicators with the stock making new 52-week highs frequently, giving us many opportunities to enter. And also Monsanto is in a leading industry group, the agricultural group. And the trend confirmation indicators also work for bearish funds. We can see this is the short financials fund, and it's making a series of new 52-week highs, which allows us to enter, and it confirms that the financials are in a downtrend and that the bearish fund should be bought. And here's the short real estate fund, again with confirming indicators, making new highs, and it's in one of the poorer performing industry groups, confirming the downtrend of the real estate stocks and the uptrend of a bearish real estate stock fund. The MVP Trendline stock strategy has proven to be a successful method for selecting profitable stocks. And the MVP option strategy builds on this success by purchasing call options on stocks that qualify as MVP stocks. When I decide to purchase a call option, I'd like to use historical price data to help me select the time length of the option. Now there's 3 different option expiration cycles. The first cycle is the January, April, July, and October expirations. The second cycle is the February, May, August, and November expirations. And the third cycle is the March, June, September, and December expirations. So all options fit into one of those 3 cycles. So what I did was I studied the price data on option expiration day, and that helps me determine how far out or which expiration month I should use when I decide to purchase a call option on a stock. For example, Apple uses the January, April, July, and October expiration cycles. So the Apple option expiration cycle, if you wanted to trade the January options, they're usually available 6 months prior to expiration, which would be in July. And if you trade the October options, again, those options become available 6 months prior to October or in April. And also, like most other stock options, Apple also trades monthly options for all 12 months of the year, but the monthly options that are not in the Apple January, April, July, and October expiration cycle, they don't become available to trade until just 2 months prior to the monthly expiration. For example, February is not in the Apple option expiration cycle, so the February options become available for trading 2 months prior to expiration, which would be December, and the Apple March options become available to trade in January. So now this price table I'm displaying here displays the price of Apple stock on expiration day for each month in 2007. So on January 19th of 2007, that was the 3rd Friday of the month, Apple stock was trading at $88.50, and on February option expiration, Apple was trading at $84.80. And this table also displays the monthly gain or loss in the stock. So between January option expiration and February, the stock lost 4.2%. And I also display the 3-month returns here. So on April 20th of 2007, the 3-month return for the April option, which you would have bought here in January when the stock was trading at $88.50, on April 20th the stock was trading at 91. So it had the stock had a 2.8% return for that 3-month period. And on April option expiration, if you bought the July options, you can see here that during that three-month period, the stock had a 57% return. So what this allows me to do is track the monthly gains for Apple stock on option expiration day, and it also tracks the 3-month profits for Apple stock for the Apple option cycle, which again is January, April, July, and October. And then I also track the 6-month price movement of Apple stock for the January and July options. Now I had 50 months of price data for Apple stock, and what I found out was that if you bought the monthly Apple options, 73% of the time the stock went up in price. And if you go a little further out to the 3-month options, our accuracy rate goes up to 88%.